to our afternoon and then into the week. We're looking at the Fed Watch Tool, and there's 37 days until the next FOMC meeting. And we have had some of the wildest swings that we've ever experienced inside of the Fed Fund futures. Before all of the geopolitical events that were going on in the world, there was a rate cut that was being priced into June of 2026. But as crude oil spiked, that rate cut got pushed out into really even September of 2027 for a brief moment this morning before the 5-day what do we want to call it here, the 5-day delay or of the bombing Iran. There was actually a rate hike that was being priced into 2027. And the question, of course, as we're going into the beginning of this week is does this look any different than any other squeeze into resistance since we failed to break out of these previous highs? And the answer is no. In fact, we've had some pretty interesting counter trend squeezes at the beginning of the week that have eventually led us to a continuation of our weakness events. And you can see that here. So we were coming out of our previous highs, and we had traditional shorts that we were squeezing out of at the beginning of the week. Remember this 3 weeks ago? These old counter trend longs into resistance where we broke extensions and then had new traditional shorts almost perfectly, leading us to our profit targets. And then we had our halfway back short again, and that had a squeeze coming out of the beginning of the week. And then we had our resistance levels, which we ran into. Remember, there were counter trend longs from lows into this resistance coming out of a Monday. And then we started going straight up in extensions. Our extension long targets were the high inside of that daily short. And then we rolled over. And of course, we had 50% shorts leading us into the end of the week once. And then on Friday, there was a big front run of a second. But on Monday, going into Tuesday, this was the rollover. At the beginning of the week, we were squeezing right up into resistance. And we had counter trend longs. We made the case that they were the new contracts lows to highs, which were the high of the week. And then we broke extensions. And that's what rolled us over, coming out of our resistance levels, leading into this sell-off, running us all the way to the negative 61.8% line of our retracement that we had on Thursday afternoon, Friday. And then we came within about 5 points in completing our profit targets. Well, we're squeezing all the way halfway back again. And market participants see this rally in the morning, and I think all of the, at least the perception could be that all of the dangers are over. We have to think about this from the perspective as anything changed. And of course, nothing has changed with the global economy. But there are some forces that we're going to have to pay attention to as we're moving forward here into the week. And the first one is the dollar inside of a trend break. The second is the VIX. It is going to be running into an opposing setup. The third is crude oil, because that is affecting Fed Fund futures. This stream continues at eMiniAddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.